Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market update for Tuesday, November 22nd. Stocks on Wall Street opened with modest losses following a downward revision of third quarter gross domestic product. The Commerce Department now estimates that the U.S. economy grew at 2% pace from July through September, down from an initial estimate of 2.5%. Economists had predicted a reading of 2.3% growth. The larger than expected revision was mainly due to companies reducing their inventories and not investing as much as they did in the second quarter. We'll get a look at how policymakers feel about the U.S. economy when the Federal Reserve releases the minutes of its November meeting later this afternoon.
Following the GDP data, the dollar is rebounding from earlier losses, as are U.S. Treasury prices. The yield on the benchmark 10-year note is holding steady below 2%. Meanwhile, the major markets across Europe have given up their modest gains, and U.S. stocks are falling deeper into the red. The Dow Industrials fell more than 2% yesterday on reports that the so-called supercommittee had failed to reach a deal to reduce the federal deficit by $1.2 trillion over 10 years. The co-chairs of the committee confirmed those reports after the markets closed. Now, automatic spending cuts to domestic and defense budgets are slated to go into effect in 2013. But investors do seem to be taking some solace from the fact that the ratings agencies have maintained their ratings and outlook on U.S. government bonds, at least for now. Fitch Ratings said it will conclude its review of the nation's sovereign debt by the end of the month.
On the corporate front, we're keeping an eye on shares of Bank of America. According to the Wall Street Journal, U.S. regulators have warned the company that it must follow through on steps to strengthen itself or face possible public enforcement action. A previous memorandum from the government identified governance, risk, and liquidity management as problems that need to be addressed. One big stock winner in early trading is Medtronic, up nearly 4%. Earnings at the medical device maker jumped 54%, and revenue increased by 6%. Medtronic saw growth across most of its businesses, although sales of defibrillators and spinal products remained weak.
Two food companies are also out with earnings this morning. Both Campbell's Soup and Hormel Foods posted lower quarterly profit numbers, but Hormel boosted its outlook for the full year and raised its annual dividend by 18%. Meanwhile, in the technology sector, Hewlett-Packard reported a big drop in its fiscal fourth quarter profit. In the company's first quarterly report under new CEO Meg Whitman, HP also reduced its earnings outlook for the current quarter and the full year. Right now, the stock is dropping 5%. And finally, Netflix is more than 6% down, making it the worst performer on the S&P 500. The movie subscription service raised $400 million in common stock and convertible notes in order to strengthen its balance sheet and help it return to profitability. That's the latest from Weiss Research. Have a great trading day.